Welcome back, everyone. This video is going to be Forex in 5 minutes here at Limitless Forex Academy. We're going to talk about major and minor structure. So we're going to get more into the advanced market structure phase here after you should have already seen basic market structure and our previous videos. So what we're going to talk about here, as I said, major and minor structure. Simply put, we're going to look at the big swings in the market where we also then see, within that we also see smaller waves within the market. So what I mean by that is when we see price push, generally speaking, as you see here in GBP, JPY, we have a bullish trend. Now, just because we have this bullish trend, it does not mean that price is constantly pushing in one way. Price does not move like this. This does not look like this. So how do we then understand the market structure in these moves if it doesn't look like this? So, sorry. What we actually see here is we have the big major swings, and we're going to call these the major market structure, which is the bigger overall move. And then within that, what we actually have is price forming a series of higher highs, higher lows in the bullish pushes, and lower lows and lower highs in the bearish pushes, all the way up and then all the way down when we move. And the reason for this is because pairs are fractals of each other. So that is where we've got time frames. We have higher time frames obviously have bigger moves, and then within those we have lower time frame moves. Because we have these different sessions, price never just pushes straight in one way. We always have an imbalance of supply and demand in the market where that's what dictates price going up or down. We can spot this through the minor structure and the major structure. Now, to map this onto this, we have big, strong structural pushes up. We then have structural pulls down, structural pushes up again, structural pulls down, and then structural pushes up again. This is the major structure. The major market structure here is that we are in a bullish trend. Price is overall pushing up. Then within that, we have all these small pulls in the market. You'll note how price does not just push one way. It moves in small waves within the big overall waves. That's the simplest way I can break that down, is to say that we have the big overall waves, but within that we have lots of small waves within those pushes, which is how we trade the market. So we can trade both the major and the minor structural moves, but it's very important to always keep in mind the major structure, because the major structure, unless we see a structural change, the major structure usually wins out in the end. So for example here, if I was looking for buys, I see that this is in a big overall major bullish structure. If I look for sells even within that, when I see that we're in a bearish structural put, this is going to be much, much riskier than looking for buys, because although we may be in a minor bearish structure here, we know that overall major structure is bullish, meaning that it's very likely that at some point this bearish pullback is going to wear out and the bulls are going to come back in. So if I was, for example, looking for sells here based off a break of this minor structural region here, so as we know, drawing structural levels, this fresh structure, when price broke down, it's going to be risky because I know we're in an overall bullish structure in the major structure. So we need to keep in mind minor and major structure, because that is how we're going to be able to get those accurate entries, and we can actually trade in line with the major structure, but using the minor structure to get the precise entries. So I'd be looking for buys. I'd then look for this minor structure to change. And what we actually see is that price breaks minor structure up back in line with the overall bullish major structure. And then we form this higher low here and push up. So that is how we're going to use major and minor structure. Linking them together is going to get us some very, very high probability entries with nice tight stop losses and good risk reward. So that's how we use them. That's getting a bit more into advanced market structure. If you found this useful, make sure to subscribe, and I'll see you in the next video.